Hello and welcome back to Bhavani JIB. Today we are talking about retail banking, specially made for Indian bank employees aiming to crack JAIB. In our journey through paper 4, module B, we start with the 11th unit, remittance products. Here we will be learning about remittance products, NEFT RTGS, electronic clearing services, MMS, AAPS, BBPS, etc. Remittance products have evolved over a period from physical movement of remittance instruments to instant electronic transfer of remittances across the country. Demand drafts, bank orders, telegraphic transfers are some of the earliest remittance products. After the invasion of technology, newer, speedier, and innovative remittance products have evolved, and the use of paper based instruments form nearly 60% of the volume of total non cash transactions in our country. The two most traditional forms of making remittance were the bank check and the demand draft. Bank checks are issued for making local payments on behalf of customers. It is for the purchase of stationery, furniture, telephone, electricity bill, etc. Demand draft is a non-negotiable it is a negotiable instrument drawn by one branch of a bank upon another, instructing the latter to pay a certain sum of money only or to the order of a certain person. So this is about the earliest remittance products or the traditional remittance products that were used traditionally. NEFT, National Electronic Fund Transfer. It is a nationwide payment system facilitating one-to-one fund transfers. Under the scheme, individual firms and corporates can electronically transfer funds from any bank branch to any individual firms or corporates. NEFT operates on a deferred net settlement basis with settled transactions in batches. The Indo-Nepal Remittance Facility Scheme has no limit either on the minimum or the maximum amount of funds to be transferred. However, maximum amount per transaction is limited to 50,000. NEFT transactions can be made 24 into 7, 365 days with a view to promote digital transactions and global integration. They go in 48 half hourly batches every day. These transactions are settled in B plus 2 timings. That is, any transaction will happen within 2 business hours from the batch in which the transaction was settled. The customer can track the NEFT transaction using the unique transaction reference number, which is also called as the UTR, provided at the time of initiating the fund transfer. The NEFT process flow. The originating bank prepares message and sends the message to its pooling center, which is also called as the NEFT service center. The pooling center forwards the message to the NEFT clearing center. The clearing center sorts the fund transfer transactions to the destination bank-wise and prepares accounting entries. Next step is the destination bank receives the inward remittance message from the clearing center and passes on the credit to the beneficiary customer's account. This will be the process of the NEFT fund transfer. RTGS, that is the real-time gross settlement system. It is order to order basis, and the remittances here are credited on a dynamic basis, and settlement is also made on the dynamic basis. That is then and there. The minimum amount to be transferred is 2 lakhs, but there is no upper ceiling or the maximum amount that can be transferred through RTGS. This also, like the NEFT, can be done 24 into 7, 365 days. The inward charges are free, but when it comes to outward charges, 2 to 5 lakhs will incur 25 rupees and above 5 lakhs will incur 50 rupees. The RTGS process flow, there are 3 types. The interbank transactions, the customer payment transaction, and the delivery versus payment transaction. Interbank payments and transactions mainly arrange for treasury operations such as the debt market deals and the foreign exchange transactions. When it comes to customer transaction, it is the general RTGS that we usually see. the remittance from the customer to a beneficiary of the same bank. But when it comes to delivery versus payment transaction, it is a transfer of funds from the banks of one RBI account to another done by the Treasury Department to maintain liquidity. So, this is about the RTGS process flow. ECS, or the Electronic Clearing Service, is used by the institutions for making bulk payments towards the distribution of dividends, interests, salary, pensions, etc. ECS credit payments can be put through by the ECS user only through his or her bank, which is known as the sponsor bank. And ECS credits are offered to the beneficiary account holders known as a destination account through the beneficiary's account holder's bank, which is known as a destination bank. The categories of ECS is operating at 81 centers across the country, while regional ECS is operating at 9 centers at various parts of the country. National ECS is centralized version of ECS which is operated at Mumbai and facilitates the coverage of all core banking enabled branches. NACH, National Automated Clearing House. NACH system was implemented by NPCI, that is the Payment Corporation of India for banks and financial institutions, to make bulk transactions towards distribution of dividends, interests, salaries, etc. It is launched with the aim to consolidate multiple ECS systems and it uses the core banking system. Okay, this is about the NACH. Aadhaar payment system has been helping the government in making the direct benefit transfer scheme a success, which includes gas subsidies or scholarships to students, or sometimes the special women empowerment schemes, which involves giving 2,000 per month to the women, etc. The Aadhaar enabled payment system, also called as the AEPS, which is an online interoperable financial transaction at point of sale, that is POS, through the business correspondents or bank mitras using the Aadhaar authentication services. The services offered by AEPS include cash withdrawals, deposits, balance inquiries, and Aadhaar to other fund transfers and mini statements. Next is the BBPS, the Bharat Bill Payment System. It is an integrated bill payment system in the country which enables multiple payment modes and provides instant confirmation of receipt of payment. It provides the anytime, anywhere bill payment service to all customers. The channels of payment include banking, internet banking, mobile, POS, mobile wallets, ATM, etc. So far, we have learned remittance products, NEFT RTGS, electronic clearing services, that is ECS, MMS, AEPS, BBPS, etc. Don't forget to subscribe for more insights into the world of banking. Stay tuned, stay informed, and keep banking the Bhavani JAIIB way. Thank you. And next up, we will be learning the next unit, digitization of retail banking products. Until next time, happy banking.